based on virtues. If they're good things, but other girls, then you should not want to worship them. That you become. But what if left over? That live on in the memories of your loved ones. If you really want to escape the things that harass you, what you're needing is not to be in a different place, but to be a different person.
Hello, good morning, ladies and gentlemen. I would like us to confirm that we are good to go. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this started. I would like to see some feedbacks in the comment section. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section while I load up my charts. All right, so I can see Mutam Banika. Good morning to you. Okay, I see 863-4461. Good morning. How are you doing today? All right, thank you for that confirmation. 309 8276. Good morning. Thank you very much. So I will be taking this feedback as a confirmation that we are good to go. So it's a Friday. Happy Friday to you all, and I'm excited to welcome you to another promising session on the Extreme Speed. My name is Sharif Daramola, and as usual, I will be your anchor for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And today being the last trading day of the week, we want to be doing some rounding off, and if possible, if we have very good trading opportunities, we also want to be taking advantage of it. So whatever positions we have currently, we want to be locking in some profit, moving our stop loss accordingly. And one thing about Fridays, one thing about the last trading day of the week is simply the fact that the major participants in the market who are taking advantage of a potential move at the beginning of the week will definitely want to be taking some profits on the last day of the week, and this will be reflected on the chart as a retracement move. So we don't want to get caught up in this kind of situation, so we will be moving our stop loss accordingly, and I will be advising you on how to go about that during the live session. So my advice is that you stay tuned in so that you don't miss out on any of these updates. And in addition to that, we also want to be looking at the macroeconomic events. And for your information, we really don't have anything on the economic calendar to look out for today based on the current instruments we have been monitoring since the beginning of the week. So with that being said, with no macroeconomic event to look out for, we shall be looking at the chart from a technical standpoint, looking out for trading opportunities, and also looking out for ways to maximize our existing positions as well. So with that being said, we shall be diving right into the chart here. And as usual, the first commodity we are going to be looking at this morning is the US oil. All right, so on the US oil, we have been in a profitable situation here since the beginning of the week. So how did it all go? So at the beginning of the week, we had this sell momentum that started below the $80 level. Remember how important the $80 level is. I will be sharing that with you in a moment after running through the 1 hour time frame. So we saw the sell momentum at the beginning of the week, the breakdown retest of the $79.50 level, which gave us that opportunity to sell, and we sold actually, but was taken out of the position earlier on Tuesday at break even. So with the continued buy pressure around the $79.50 level, it was a very good opportunity for us to buy, and we bought the US oil at the beginning of Tuesday's trading session, New York session. We bought that move all the way up, and we were able to take over 250 pips move before we saw this bearish momentum started on Wednesday here. And we also joined this. Remember, on that same day prior to this event, we saw this bullish trend line as a yardstick for trading activity, and we also used the $81.50 level also, where we said a breakdown of that structure will give us an opportunity to sell. So we sold all the way down into the $78.50 level, and that gave us about 300 pips on one position there. And during the live session yesterday, we were around here. If you remember vividly what we talked about here during the live session, where we saw our price action was caught within a consolidation phase between the $79 level here and the $78.50 level, which has been serving as a support level of that channel. And one thing we were looking forward to during the New York session yesterday was either a breakout to give us an opportunity to buy, or a breakdown of that structure to give us an opportunity to sell. And in fact, the latter is what happened here, as we saw the breakout of the $79 level here, with a rejection of that structure of our lower time frame, giving us an opportunity to buy the US oil. And in fact, we rode the move all the way up. Price action broke out of the structure at the $79.50 level, giving us an opportunity to add more position. Then a breakout of the $80 level also gave us another opportunity to add more position to our existing trade. And in fact, since yesterday, for everyone who have been part of this profitable journey, kudos to you for being on standby to catch that move, as you will currently be running with at least the first position will be running with about 180 pips. Then the second position will be running with about 120 pips, and the third one is definitely running with about 70 pips in profit. So for those who had been part of this trading journey since yesterday, what we are going to be doing now is to lock in some profit. And we had the structure here which I was able to share by public platform here yesterday evening, between the $80 level and the $80.90 level and the $80.60 area. So for the sake of this situation we have here, we will be moving our stop loss to somewhere around the $80.50 level. Let's give some room for price action to breed, probably in anticipation of another wave of bullish momentum at this point. So let's ensure that our stop loss is moved accordingly to around the $80.50 level, while we scale up into the daily time frame to look at what is really going on here from a technical standpoint. And then we shall be coming back to our 1 hour time frame to decide what our next line of action will be for today. So with that being said, we shall be diving right into the daily time frame now. And on the daily time frame, let's see what we have here. So like we stated at the beginning of the week, we initially identified this bearish trend line after connecting the series of lower highs here. As you can see, throughout the course of the last 7 months, price action has consistently found lower heights, and as a result of that, we connected a series of lower highs here to give us that bearish trend line. However, when we zoom into what has been happening here since the month of September, we saw that price was caught within a channel, though it was not uniform. So we saw the supply level of that channel here. That's the resistance point for the channel at the $93.50 level. Then we also had the support level of the channel sitting at the $75 area, after which we saw the final breakdown of that structure here during the month of December. That was last month. And this was as a result of the selling niche around the $80 level. Price action retraced back into the structure during the end of last year, and at the beginning of this year we saw another sell move, breaking down the $75 level the second time in a month. And at this point, we at the beginning of last week trading session, we identified the fact that price was unable to break the previous low. So we saw a higher low here at the $73 level, and the lowest point price has ever been in the last 7 months is the $70 level. So price was unable to break the previous low, hereby giving us a higher low. And whenever we cite a higher low like this, it's a sign that buyers are gradually coming in this market. And if we looked at the structure critically well, following the previous impulse leg here that started at the $93.50 level, we saw this impulsive move testing the $70 level. Price action came back to the $80 area. Price was unable to break through the previous structure. Then we had something like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And for a reversal pattern to be mature for trading, we want to be seeing a breakout of that reversal pattern at the neckline area. And if you look at the $80 level here, which has been serving as a strong selling niche for participants in this market in the last couple of months, it falls right within the area we can call our neckline. And what we are going to be looking out for is buying right above the $80 level to confirm that this is a reversal pattern that we might likely join up into probably the $85 or the $90 area. so we don't know how far that's going to go. And since the beginning of this week, we have cited a situation here where price action had continued to oscillate around that neckline area, as there is some level of indecision in this market at that point. And to emphasize the importance of the structure, if you look at the bearish trend line we identified earlier, you can see it shares a beautiful confluence with that $80 level. And what we are looking for is a breakout of both the $80 level and the bearish trend line to give us an opportunity to continue to buy the US oil. So since the beginning of the week, we have been buying the US oil right above the $78.50 level, that purple line you can see here. So every time price comes within that level, we have been noticing buy pressure from that area, and we have been buying since the beginning of the week from that structure. So at this point in time, remember we had a buy position on our 1 hour time frame, and I told you to move your stop loss accordingly. And we shall continue to monitor price action here as we look forward to see how price action will be reacting to the structure here at the $81.50 level to decide if we are going to be going to the upside or going to the downside here. And the reason why that is this: if you look at what has been happening around the $81.50 level since the beginning of the week, you will notice that as soon as price gets into that structure, we have been seeing sellers negating all bullish momentum from that level. So every attempt by the buyers to break out of the $81.50 level since the beginning of this week has been negated by the sellers. So at this point, we really need to understand what is really going on around there on our lower time frame, and to better understand this, we shall be scaling back into our 1 hour time frame. Let's see what is really going on around the $81.50 level. If we cite a trend continuation pattern, then we get ready to buy, and then if we start seeing reversal patterns around that level, then we will definitely be looking out for selling opportunities. So with that being said, we shall be going right down to our 1 hour time frame. So here we are on the 1 hour time frame. Let me reset this chart so that we can see things more clearly and zoom it out so you can, I hope it's more clearer now. So we are moving right into the $81.50 level, a level which we identified on the daily time frame. Now look at the bullish momentum we took advantage of yesterday, right above the $79 area. We rode the move all the way into the $81.50 level. And one interesting thing about the $81.50 level here is the fact that as soon as price got into the structure, we have been witnessing selling pressure from that level to emphasize some level of bearish strength at that particular point in time. So we need to be very, very careful here to understand what is really going on here in order to make a decision for today. Now, with that being said here, and if you look closer into the structure here, as soon as price retested or rejected the $81.50 level here, we can see that price was caught within a channel between the $81.50 level and the $80.50 area. So in that regard, we shall be using this channel here, the range here, as a guide for our trading activities for today. So for the sake of this video right now, I will delete the $80.90 level, and we shall use the $80.60 level, which is a support level of this channel. This channel we just identified here between the $81.50 level and the $80.60 area. And you know that whenever we have such channels like this, we are going to be patient, waiting out for either a breakout or a breakdown of this channel to give us an opportunity to either buy or sell the US oil at this point. So at this point, we need to be very, very patient. And for those who already rode the bullish momentum from the $79 level yesterday, what we want to be doing right now, move your stop loss accordingly, and we have identified somewhere below the $80.50 level as an area to move our stop loss. Remember, so ensure you move your stop loss accordingly to lock in some profit here while we monitor the range which price has been oscillating here since the later part of the New York session yesterday. So what we are looking forward to today is a breakout of the structure to give us an opportunity to add more position to our existing trade, or a breakdown of the $80.60 level to give us an opportunity to sell the US oil for today. So let's remain patient here at this point. Then, in addition to this current structure we identify here, I want to show you something that makes this whole confluence here a little bit more interesting. And now that is the bullish trend line which has been guiding bullish momentum since the beginning of this week. Remember, we had this bullish trend line figured out after connecting the series of higher lows before the bullish trend line was broken here on Wednesday to the downside. And you know, from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that one point in time price is likely going to come back to a retest of that structure to incite another wave of bearish momentum to the downside. And if you look at what has been happening here in the last 24 hours, I think 12 hours rather, you can see that we have been witnessing some selling pressure around that bullish trend line which was broken on Wednesday, giving us a clue that there is an indecision as participants are not sure if this is going to be inciting a sell-off. As you know, we had a sell-off that started on Wednesday here, which broke down that bullish trend line. So we saw a retracement phase, people taking some profit off that move, and we might likely see another breakdown of that $80.60 level, which is the support level of this new channel, to incite another wave of bearish momentum. So we want to be anticipating that and getting ready to join that move if it happens at this point. So we are at a very critical point, so we need to be very, very patient around this area, waiting out patiently for a signal which will definitely come in form of either a breakout of the $81.50 level to give us an opportunity to buy, or a breakdown of the $80.60 level to incite the second wave of that bearish momentum to the downside. So this is what we are going to be looking forward to on the US oil for today, and I hope you screenshot my screen so that you can use it as a reference point when you're about making your individual decision on this commodity. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section while I move on to the next option. So let me take the next 10 to 15 seconds to read through the chart and see. Okay, so I can see some spam in the comment section here. So my advice is everyone should be wary of all the spams. They are highly very fraudulent, I guess. So I will advise that you be wary of such adverts you're seeing in the comment section, and anything besides extreme speed is considered invalid and of high risk at this point. So with that being said, and no questions here, kindly let's move on to the next pair. So the next option we shall be looking at this morning is the US tech. And in fact, on the US tech, since on Wednesday here, we have been on the bearish momentum, and in the last 24 hours price has been a little bit choppy. As you can see, this is where we were during the live session yesterday. We were around here. Okay, we were around here during the live session. Hold on a second. Okay, so this is where we were during the live session yesterday, around the 11,330 level. And one thing we said, considering the bearish momentum we have been enjoying since Wednesday, is that we want to be moving our stop loss on our previous position to around 11,400, which I told you yesterday, and price is yet to take us out of our position. So we are all still in this trade as we continue to use this bearish trend line to guide any bearish momentum at this point. And as you can see here, since the beginning of the week, we can see our price action has been respecting this bearish trend line, consistently finding lower height, though we had a little breakout of the structure here on Tuesday, but immediately on Wednesday we saw that price broke down that structure, and since then we have been witnessing selling pressure right below that trend line. So as we have said yesterday, we continue to hold on to this bearish momentum, this bearish bias here, has the bearish trend line here, and the $11,330 level will continue to guide our selling opportunities on this one. Then, considering the consolidation phase we have been witnessing here in the last 24 hours, we shall be using a technical parameters here to identify possible trading opportunities. So in that regard, bringing out my line chart, I would like to connect the series of lower highs here to give us a temporary bullish trend line, which we'll definitely be using to guide our trading activity for today. So what we are going to be looking forward to, like I said yesterday, since we are still within the structure we identified, we will continue to remain comfortable in our sell position as long as price remain below the bearish trend line here and the $11,330 level. However, if price action breaks down this trend line here with selling pressure continuing below this temporary bullish trend line, we'll definitely be thinking of adding more position to our existing trade here on the US tech. So these are my views here on the US tech. We have a very simple setup here. We continue to look out for selling opportunities on the US tech. Now, in as much as we are looking for selling opportunities here, we also want to keep our mind open for other possibilities that could happen at this point, so that whenever it happens during the New York session, we don't get surprised or get caught up in a dilemma of not knowing what to do. So with the current situation we have here and the fact that we are using the bearish trend line here as a guide for our selling momentum, we will also definitely be using it to guide any possible bullish momentum that happens here. Now look at what has been happening here since yesterday. We saw that price had continued to find higher lows, giving us a clue that there is a tendency that buyers are likely coming in. But the fact that every attempt by the buyers to break out of the trend line here has been negated by the sellers is a good sign that sellers are still very strong at this point. However, if anything happens during the New York session today where price breaks out of the trend line, retest of that structure followed by buying pressure on a lower time frame, there is a likelihood that price will continue to the upside, breaking out of the $11,400 level to further push price to the upside. But if you are a long-term trader or a patient trader like me, I would suggest that even if price breaks out of this trend line here, let's remain patient and wait for the culmination of this move to join the second wave of the bearish momentum, as the breakout of the 11,330 and the bearish trend line here is likely going to be a retracement of the impulse leg that we noticed here on Wednesday to incite another wave of bearish momentum. But if you are a scalper, you have enough to risk, well, you could take advantage of that move with a take profit target sitting somewhere between the 11,500 and 11,520, where I said we will be looking out for selling opportunities at the site of a reversal pattern below the structure on our lower time frame, then to join that second wave of bearish momentum. So this is what we are going to be looking forward to on the US tech for today. So like I said, we have the bearish trend line and 11,330 to guide our trading activity for today. So we have the trend line here, we have the 11,330 will be guiding our trading activity for today. So if price action continue to remain below the structure, we remain comfortable in our sell position, and if price action breaks out of that trend line to the upside, then if you are a counter trend trader or a scalper, you might want to take advantage of that counter trend, but waiting for selling opportunities around the $11,500 level to join the second wave of that bearish momentum. So that is what we are going to be looking forward to on the US tech for today. So I hope that we'll be on standby to catch that move, and I hope you screenshotted my screen so that you can use it as a reference point whenever you're about to make your personal decision on this option. So with that being said, we'll be moving on to the next pair, and the next pair we are looking at today is the GBPUSD. So on the GBPUSD, the week has started on a bullish note here. Remember, we started the week at around the 1.22 1.200 level, and that is around this level here. This is where price started this week. We initially had this level as our support level for this week, as we saw the bullish momentum that took price into the resistant level for the week at the 1.22900 level. So we saw another wave of selling momentum which took price down, breaking down that support level, which gave us a clue that sellers might likely come in here. So we were caught up within a consolidation phase around here, which lasted about 18 to 24 hours thereabouts before we saw the second breakout of the 1.22200 level, the second time for this week, and that gave us an opportunity to buy the GBPUSD the second time. And we had continued to ride the move all the way up. We bought at the breakout, retest of the 1.22500, adding another position right there. Then we also bought again at the 1.22900 level, adding another position as price moved significantly well in our favor and taking us out at our TP target with how many pips was that? The first position gave us about 150. The second one gave us about 120 pips, and the third one gave us about 80 pips in profit. So we have been quite profitable on the GBPUSD as at Wednesday for this week. Now on Thursday here, we started seeing some selling pressure come in around this level at the 1.24250 level, and price broke down to 1.23850, which we joined on Wednesday. I made emphasis on this one on my public platform as well, and price dropped to the downside, hereby caught within another consolidation phase between the 1.23600 and the 1.2300 level. And whenever we have a consolidation phase like this, you know that we always look out for a breakout or breakdown of that channel to give us an opportunity to either buy or sell at that point. And now, but what happened here was a breakout of the 1.23600. We bought at that level. Price action moved about 35 pips before another wave of another accumulation of selling pressure came in again around the 1.23850, as price appears not to be capable of breaking the previous high, hereby giving us a lower high at this point to emphasize some level of selling strength in this market at this point. And with the current structure we have here, price taking us out of the previous buy position, I was able to take advantage of some selling opportunity here this morning. If you are taking advantage of it, kudos to you for being on standby to catch that move. If you are bought below the 1.23850 level this morning, I will be advising you to move your stop loss to break even. Just move your stop loss to your entry point right now while we monitor price movement. Now, price has continued to drop to the downside, and there is this trend line here which has been a major determinant of price action since the beginning of the week. As you can see how it held bullish momentum during the later part of this week, and at the beginning of the week it was holding it was broken to the downside, but price broke above that structure here on Tuesday, and since then price had remained above this bullish trend line to emphasize some bullish trend in this market. However, the inability of price action to break above the previous structure here is a sign that we need to take into consideration at this point. So with a lower high found here and connecting the series of lower highs, we have a bearish trend line. So going into the New York session today, this is what we shall be using to guide our trading activity. Now the first one is this bullish trend line, which we have identified after connecting the series of higher lows. Then we also have the bearish trend line here after connecting the series of lower heights. So we have a beautiful confluence here around the 1.23850, which we have taken this morning. And for those who are taking that, I told you to move your stop loss accordingly, lock in some profit here. And now that price has broken down that bullish trend line, which has been holding bullish momentum since the beginning of the week, it's a sign that that bullish trend line might not be capable of continuing to hold a bullish momentum, as price action just found a new lower high. So with the breakdown of the structure here, which also shares a confluence with the 1.23600 level, I would be advising us to look out for certain opportunities below the 1.23600 level here. So we already have a breakdown of this trend line, breakdown of the 1.23600. Price is likely going to come back probably to do a retest of the bullish trend line or the bearish trend line here, which shares a confluence with the 1.23850 to incite another wave of bearish momentum. And one thing we want to be doing here is to position ourselves in such a way that we can catch that move when it happened. So selling below the 1.23600 is most appropriate at this point, and we continue to guide our trade as price action continue to move to the downside. If that is the case, if a breakdown of the 1.23200 level happens, we want to be adding more position, and a further breakdown of the 1.22900 level will welcome additional position to our existing trade here on the GBPUSD. So these are my view here on the GBPUSD for today. And like I used to say here, we always want to keep our mind open for other possibilities that could likely happen at this point. So in as much as we are looking forward to selling opportunities here, if at any point price action takes us out of our position, leading to the breakout of this trend line here, it will probably be a good signal that buyers are gradually coming back into this market again, taking out all the sell position here along the trend line and the 1.23850 to incite a possible new wave of bullish momentum if we start seeing buy pressure above this structure. So let's keep our mind open on this one. The possibility of a bullish momentum above the 1.23850 is still very open, while we look out for selling opportunities below the 1.23600. And if you already have your position triggered for the for the sell position here, let's remain comfortable as long as price remain below the 1.23850 in our existing position here. So this is the simple setup we have here on the GBPUSD for today. So I hope that I was able to simulate all the possible scenarios that is likely going to be happening today. So I would advise you screenshot my screen so that you can use it as a reference point when you want to make your individual decision on this pair. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we are going to be looking at this morning is the USDJPY, which has been profitable so far, at least in the last 24 hours. Now we have been profitable on the USDJPY. So let's quickly run through how the week has started here. And looking at the current structure we have here, you can see that the week started at around the 1.127.500. This is where the week started. So the week started around here. So it has been very bullish since the beginning of the week, and we had continued to add more position to our existing trade, continue to look out for bullish momentum here. And price action was caught within this channel first of all between the 128.250 and the 127.750 level, where we said a breakout retest of that structure will be giving us an opportunity to buy the USDJPY. And in fact, that happened here on Monday. That was the New York session on Monday. We saw the breakout retest and we bought around that level. As you can see, it was a very strong buy zone for participants in this market since the beginning of the week. So we bought again around this level. We were taken out here. Then we bought again above the 128.750 level, and that day price moved significantly well in our favor. It moved about 300 pips in our favor before we started seeing another wave of bearish momentum, bringing price right back into our entry zone at the beginning of the week, which is sitting right around the 128.250 level. And we continue to look out for buying opportunity around that area, though it was quite slow as price continued to consolidate around that area for about 48-72 hours on the USDJPY. However, during the live session yesterday, we said we are still continuing to look out for buy pressure around the 128.250, which we took, and we moved our stop loss to break even yesterday, and since then price is yet to take us out of our position. And one thing we stated here again during the live session is that a breakout retest of the 128.750 should welcome additional position, which happened, and then a breakout of the 129.250 should be welcoming additional position, and that is exactly what has happened here. And price has continued to climb to the upside. So for those who are taking advantage of this move since yesterday, kudos to you for being on standby to catch all this move, as you will currently be running with a minimum of about 130 pips on the first position here, and the second position is running with about 80 pips thereabout, and the third position this morning is running with about 40 pips in profit. So we want to be moving our stop loss right now to lock in some profit. We don't want to get caught up in any sudden pullback here. Remember, we have been witnessing some selling momentum here on the USDJPY since the beginning of the year, and price action is heading towards a significant bearish trend line, which you can see here, that has been holding bearish momentum since the beginning of this year, and it's also heading towards a key structure at the 130.00 level. Remember how important this level had been since the beginning of the week. Price action has continued to since the beginning of the year, price action has continued to respect that level, so we want to be moving our stop loss accordingly, looking out for a breakout retest of the 130 point level or the bearish trend line here to give us an opportunity to add more position to our existing trade. So kindly move your stop loss to around the 129.250 level. That was our entry point this morning, and let's see how far this momentum is going to go here. So that is that on the USDJPY. Then we went on to talk about the XAUUSD yesterday, and on the XAUUSD too, we are quite profitable here. So during the live session yesterday, we had the situation here where we were looking out for a breakout of the $1,910 level, which happened during the New York session, and we were able to take advantage of that move all the way up. Added another position at the breakout of the 1,917, added another position at the breakout of the 1,920, making 3 positions as price action hit our TP target at the $1,929 level, with about how many pips that is. The first one is 1,900. Then the second position gave us about, hold on a second, let's see how many pips, 1,200 pips, and the third position gave us about 800 pips thereabouts. So we're roughly about 4,000 pips profit in the last 24 hours. The week has been on a bullish momentum here on the XAUUSD here, as you can see, and we have this bullish trend line here, which has been respected since the previous week here. And if we connect the series of higher lows, we continue to see that price has consistently respected that bullish trend line, and price had continued to find higher highs and higher lows. Now at this current structure here, which we are right now, price is currently oscillating around the $1,929 level, and if we go to as far back as the beginning of this week, we notice that we have a selling niche around this area at the beginning of the week, which is a sign that that level is a strong selling niche. And on Wednesday here, we can see attempt by the buyers to come close to the structure, though we saw a sharp rejection of that zone, pushing price further to the downside. Though we had the breakout of the structure yesterday, but one thing you will notice here is that since the breakout has happened, we have seen a huge consolidation phase between the 1,935 and the 1,929 to emphasize that there is an indecision in this market. And now that we don't have any macroeconomic event to look forward to bring some liquidity into the market, I am of the opinion that those who are taking advantage of this bullish momentum right above the 1,905 level on Thursday yesterday would likely want to be doing some profit taking activities. And if we are going to be seeing some profit taking activities here, it's going to be reflecting on the chart as a retracement of that previous impulse leg to the downside. And if you look at the structure here around the $1,935 level here, you will notice that as soon as buyers tried as much as possible to break out of that structure, we saw out that level has been a strong selling niche, negating all attempt by the buyers to break out of that structure. In fact, we saw the breakdown of the 1929 from the selling pressure from this level, and it's very likely that we might have a second breakdown of that structure. And if that happens, then this situation, this price action here will be transitioning into a reversal pattern in the form of a double top structure, which has a tendency of inciting a bearish momentum going forward. So we want to be on standby to catch any of this move that will happen here. So to do that, we have the 1929 level below the structure as an area to look out for selling opportunities. So if price breaks down the $1929 level here with selling pressure below the structure, we want to be joining that decline to the downside. And this market here has a tendency of giving us multiple entries, as we have key levels around this in this market that we could use to add more position to our existing trade. So we have a level at the 1920, which has been a strong selling niche at one point. Look at what happened here at the beginning of the week. We saw this level being a strong selling niche. We saw the breakdown of the structure. We saw a retest of the 1920. We saw on Wednesday here also, we saw selling niche here as well. We saw some attempts of selling pressure coming in here before the breakout of that level happened yesterday. And if a breakdown of the 1920 happens today, there is a high chance that this could turn out to be another sell-off opportunity in this market. And now if price breaks down the $1917 level one more time again, we will definitely be looking forward to adding more position to our existing trade. So where will our take profit target be for the sell position here? Well, if we look at the current structure here and taking into consideration the fact that price action has been bullish since last week, and using the bullish trend line here as a key factor to this, I will suggest that we have our TP target sitting somewhere between the 1910 and the 1905 level, an area which shares a beautiful confluence with that bullish trend line that you can see here. And if it so happens that price action breaks down that bullish trend line and retests that structure with selling pressure on our lower time frame, it will be a good opportunity to add more position to our existing trade. So this is what we are going to be looking forward to selling the XAUUSD for today. However, if price does not drop to the downside, but instead it continues to climb to the upside, then we have the resistant level sitting at the 1935 level as an area to look out for buying opportunities. So if price breaks out of the 1935, if possible buy pressure comes in here, then we add more position to our existing trade here on the XAUUSD. So to make things easy for us during the New York session today, I have identified a simple pattern here that we want to be using to guide trading activity. And these are the 1935, which has been the support resistant level since the early hours of today. And then we have the support level at the 1929, which a breakout of either of the structure will be giving us a signal of the potential direction of where price action might be going as we head into the end of the week. So my wish is that we be on standby to catch either of this move. You can use your stop order to position yourself in such a way that you can catch this move when it finally happens. So I hope this is very well understood here. If you have any questions, if you feel you need some further clarity in an aspect which I've just discussed, feel free to drop your inquiries in the comment section, and I am willing to be of help in that regard. So let me quickly run through the comment section and see if there are any questions before I move on to the next pair. So we have Zirigeta. Good morning. Thank you very much for that confirmation. Okay. Kunal B. Okay, thanks for that feedback, Kunal B. Really appreciate that. Okay. All right. So Nikki234, thanks for the compliment. All right. P5, good morning to you. 8199, good morning. All right, so in the absence of no questions, I want to assume that we are on the same page here, and let's move on to the next pair. And I think that's going to be the last pair we are going to be treating for today, and that is the EURJPY, which was introduced to us by Steamroller on Monday, and we have been riding this move all the way up. In fact, it has been a profitable position for us on the EURJPY, as we have multiple entries confirming that the situation we have here has been quite massive. And I hope Steamroller is still in the house here, and I hope he made some money on this one. And let's quickly do a recap of how the week went by on the EURJPY. So at the beginning of the week, this is where the week started. It has started on a bullish note, as we saw our price continue to find buy pressure above the 138.00 level, as you can see here. We saw this happen on Monday. We saw this on Monday. We saw this on Wednesday here. And we also saw this opportunity here on Thursday. So we had quite a lot of opportunity here on the EURJPY. In fact, the culmination of this opportunity was on Wednesday, where we were able to make over, let's see how many pips was that, over 350 pips in profit here before this bearish momentum started on that same day. And the bearish momentum took us all the way down into our entry point on Thursday, and in fact we saw buy pressure around that area on our lower time frame, which gave us another opportunity to join that rally to the upside. And one thing we said here during the New York session, during the live session yesterday, was that if we had missed out on this opportunity, let's remain patient here and wait out for the market to give us a second chance. And we were actually looking out for a second chance at the breakout retest of the 138 level during the New York session yesterday. And in fact, this is exactly what happened. We saw price action breakout, did a retest of that structure, giving us an opportunity to buy, to add more position to our existing trade. Then we also saw another breakout of the structure here during the early hours of today, giving us another opportunity to add another position to our existing trade. Then during the early hours of today, we saw the breakout of that structure at the 140.00 level, welcoming another opportunity on the EURJPY. And with the situation we have here, if you are taking from the first position, you will currently be running with over 230 pips in profit. And if you are taking at the 138.00 level, you will have been at in 160 pips in profit. And the third position here above the 139.250 is currently running with over 120 pips, and the one this morning is running with about 45 pips in profit. So it has been a very profitable situation for us here on the EURJPY. So what we are going to be doing now, for those who are taking advantage of this trading opportunity, is to move our stop loss accordingly to lock in some profit at this point. And remember, yesterday I showed you a caveat here regarding the management of this trade, and that is at the 140.500 level, which shares a confluence with that trend line we identified earlier. Remember, we saw the breakdown of this trend line here on Wednesday, and from a technical standpoint, there is always a likelihood that price action will come back, do a retest of that structure to incite another wave of bearish momentum. So we need to be very careful here, as we want to see how price action will be reacting to this trend line to decide if we are going to be adding more position to our existing trade, or we should be anticipating a selling opportunity from this level. So with this structure, as price action approaches the structure, what we want to be doing now is to move our stop loss, and the most appropriate place to move our stop loss is the 140 level. As you can see, it has been a major determinant of price action in the past. So let's move our stop loss to break even for this position here at the 140.00 level area, and let's see how price action will react to this trend line. So whatever happens here will now determine if we are going to be adding more position to our existing trade, or we shall be getting ready to sell the EURJPY. So to make things a little bit clearer and simpler for us to identify during the New York session today, I would like to identify that structure around that trend line, which falls around the 140. Let's see, 140.700, I guess. All right, so we have the 140.700 level. Okay, 140.600. Okay, so that's what we are going to be using to guide our trading activity for today. So we have the 140.600. So for the sake of clarity, let's label it so that we can have a visual understanding of what we are talking about here. So now you can see how the 140.600 level shares a beautiful confluence with that trend line there. So what we are going to be doing now is to see how price action will react to that level. So if price action gets into the structure, let's see if there's going to be multiple rejection of that level, probably a reversal pattern or selling pressure on our lower time frame. So as soon as price gets into that level, we want to be scrolling down to our lower time frame to see what is really going on here. If we start seeing something like a double top structure, head and shoulder pattern, or probably a rising wedge that's likely going to be supporting a bearish momentum, then we will definitely be getting ready to join that decline to the downside. However, if anything like a breakout of the 140.600 level happens here, breaking out of the 140.600 and climbing above that bullish trend line, then we shall be getting ready to add more position to our existing trade. So for the buy position we have here right now, I'm looking at my TP target at the 141.700, and the reason why I'm having the 141.700 is simply because of this is the highest point price has ever been this week. So let's place our take profit there, and let's see how price action reacts to that level to decide if we are going to be adding more position or we are going to be joining a decline from that level. In fact, if you are taking advantage of this move on Tuesday as well, and today and yesterday as well, well, if you are taking profit here, I guess it's okay for the week, and let's live to trade another day. So at this point, we're having a TP target around here, which will be giving us about close to 1,000 pips on all the positions we have running at this point in time. So congratulations to those who are part of this trading opportunity. As we call it a day, before I do, let's do a quick recap of what we talked about today. And the first commodity we looked at today is the US oil. Sorry, if you have any questions, feel free to drop your inquiries in the comment section. I can see some comment from Kunab, this is a spam. Please don't fall for this spam, please. That's my advice. Exchange speed will not refer you to any other platform outside this. Please don't fall for the spam. All right, the first commodity we talked about today is the US oil, and to guide our trading activity, first of all, remember we are already profitable here. We have moved our stop loss to somewhere around the $80.50 level, and to guide our trading activities for today, we have identified a simple setup here, that is this channel between the $81.50 level and the $80.60 area. So what we say we are doing here is to remain patient, as we want to be looking out for either a breakout of this channel to give us an opportunity to buy. That is one scenario we are looking forward to. Then the other possible situation that could happen is if price breaks down this channel, then it will be giving us an opportunity to sell the US oil. So it's a very simple setup here. So let's just remain patient, waiting out for either a breakout of the $81.50 level for an opportunity to buy the US oil for today, and if a breakdown of the $80.60 level happens, we want to be thinking of selling the US oil for today. So it's a very simple setup here. Then we went on to talk about the US tech, and on the US tech we have been enjoying some sell momentum here since Wednesday, and one thing we said to guide our trading activity for today had these two structures. The first one is this bearish trend line, which has been guiding bearish momentum since the beginning of this week, and then the second one is the 11,330 level here. And now, how do we make use of the structure? Well, I've told you that for those who had the sell position running, we have moved our stop loss to somewhere around 11,400, where we are looking forward to a breakdown retest of this trend line here to incite another wave of bearish momentum, which we want to be adding more position to our existing trade. But in as much as we are looking for selling opportunities here, I said the possibility of a breakout of this trend line could happen, which could in fact lead to another breakout of the 11,400. But if this happens, I'm not going to be moved, as I will remain patient. And the reason why that is simply because of this impulse leg that we had that started here on Wednesday. And if any breakout of the trend line happens, I want to be seeing this as a retracement of that impulse leg. And you know, whenever we go through a retracement phase, we are anticipating another huge move of a sell off. So if you are with me on the sell momentum, definitely, even if price breaks out of this trend line or the 11,400, we will remain patient at this bus stop here between the 11,520 and the $11,500 level to join another wave of bearish momentum. And if you are a scalper, you are comfortable taking trades against the trend, well, you might want to take advantage of that breakout to the upside. But one thing I will advise you is that as soon as price moves in your direction, you want to be moving your stop loss accordingly to lock in some profit, as we are on the bearish momentum here, and you don't want to get caught up in any sudden pullback that might take you out of your position in a loss. Then we went on to talk about the GBPUSD for today, and on the GBPUSD we have been enjoying a bullish momentum since the beginning of the week. And in fact, on Tuesday we made some profit here. We had 3 positions running. The first position gave us about 140. The second position gave us about, how many pips that was? That was about 120 pips in profit, and the third position gave us about 80 pips in profit. So we had about close to 300 pips approximately on the GBPUSD for this week. Then since Wednesday afternoon, that was during the New York session, we begin to see some selling pressure around this level, and we can see that price is unable to break the previous high, hereby giving us a new lower high. And as a result of this, we have this bearish trend line figured out. And if we look at what has been happening here since the beginning of the week, remember we have a bullish momentum. Price has continued to find higher lows, and if we connect the series of higher lows here, we have this bullish trend line here figured out. And what happened in the last couple of hours now, price action has broken down that bullish trend line to give us a sign that that trend line might not have the capacity to continue to hold bullish momentum here. And coupled with the lower high here and the selling pressure identified below the 1.23850, breaking down this bullish trend line is a very beautiful sign that we might be going in for a sell-off, as participants in this market who took advantage of this bullish momentum could likely go through a profit-taking activity, which will be reflected on the chart as a retracement of this impulse leg. So we want to be on standby to catch this move when it happens. So we already have a breakdown of this trend line, and it appears price action is going through a retest of structure to incite another wave to the downside. So we are looking forward to selling below the 1.23600 during the New York session today. So I hope that we'll be on standby to catch that move. When it happens, you can use your stop order to position yourself very well to join that decline to the downside. And if price continues to fall to the downside, breaking down the 1.23200 level, we want to be adding more position to our existing trade, and a further breakdown of the 1.22900 level should be welcoming additional position to our existing trade here. Now, in as much as we are looking out for selling opportunities, we have identified that this trend line could likely be broken to the upside, and if it gets broken to the upside, we look out for buying opportunities above that structure. But I doubt if that's going to be happening for today. But in as much as we doubt it, if it happens, we want to be ready for it. So that is that on the GBPUSD. Then we went on to talk about the XAUUSD for today, and on the XAUUSD, we actually have been enjoying. We initially enjoyed some selling momentum at the beginning of the week. We sold below this level. We continue to add more position. We sold it all the way down into the 1,905 level. However, since Wednesday, we have been witnessing bullish momentum, which we also took advantage of at the 1,910 yesterday, and we added about 3 position, and price action gave us about close to 4,000 pips as we hit our TP target at the $1,929 level yesterday. Now, since price broke out of the 1,929, we can see that price has been caught within a channel, giving us a clue that there is an indecision in this particular market. So we have a beautiful channel up between the 1,935 and the 1,929 level, where you know from our culture here in this community, whenever we have a flat channel like this, all we want to be doing is to remain patient, to look out for a signal to come in the form of either a breakdown of the structure to give us an opportunity to sell, or a breakout of the structure at the 1,935 to give us an opportunity to buy. And if price breaks down the 1,929, then this situation here, price action here, will have transitioned into a double top structure, which is a strong reversal pattern from a technical standpoint to incite a wave to the downside. So we want to be on standby to catch that move. So for the sake of simplicity, what we are simply looking out for is selling below the 1,929, so you can use your stop order to be part of this journey, or a breakout of the 1,935 should give us an opportunity to buy, as if a breakout of the 1,935 happens, that means price action has taken out all the sell positions here to give us some liquidity for buying momentum to push price to the upside. So let's be on standby to catch either of this move when they finally happen. Then we went on to close the day with the EURJPY here, and on the EURJPY since yesterday, at least in the last 24 hours, we have been very profitable here as we took advantage of this bullish momentum right above the 138.00 level. We added another position here at the 138.800. we added another one at the 139.250 level, and another one was added this morning. So we have about 4 good positions running on the EURJPY, and all of them are quite profitable at this point. And one thing we said here is to move our stop loss, all our stop loss, to the 140.00 level, as we want to be patient enough to see how price action is going to be reacting to the 140.600 level. And remember how important we said that level is. Remember this trend line which we identified at the beginning of the week, as you can see, which was holding bullish momentum and was finally broken on Wednesday here at around the 139.600. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price may likely come back, do a retest of that trend line to incite another wave of bearish momentum. So with this possibility in mind, we want to remain patient and see how price action will react to that structure at the 140.600. As you can see, it shares a beautiful confluence with that trend line that we identified earlier. So if price gets into the 140.600 here and we start seeing selling pressure below the structure, then we want to be getting ready for that wave of bearish momentum to the downside, as profit taking activity is going on at that point. However, if price action breaks out of the 140.600, climbing above that bullish trend line, it will be a good opportunity to add more position to our existing trade on the EURJPY. Now, where is our TP target for the EURJPY? I have told you that the 141.700 seems most appropriate to remain our take profit target at, and simply because that was the highest point price has ever been for this week. As you remember, on Wednesday, when we took over 350 pips profit, price action got into the 141.700 before we saw the sell momentum on Wednesday. So we are looking at that structure here for our TP target, and let's see how price action reacts with that level to decide if we are going to be selling or adding more position to our existing trade. So that is that on the EURJPY for today, and I think on this note I'm going to be dropping the curtain. It has been a wonderful moment with you guys. I really appreciate your attention, and I hope we're all on the same page. You have screenshotted my screen, and I was able to simulate all the possible scenarios that is likely going to be happening in all the pairs we have been monitoring since the beginning of the week. So let's prepare ourselves. Let's be on standby to catch these moves when they finally happen. And one thing I always say here is that you should remember that we don't want to get too excited whenever we sight a signal. A signal will come in form of a breakout of a structure on our lower time frame. What we want to be doing whenever we sight a breakout is to scale down to our lower time frame, like your 5 minutes, 3 minutes, your 10 minutes time frame. Look out for retest of structure supporting the direction of the breakout. At that point, then you could join that rally or decline, at whichever case it may be. It's always important to note that it is very good, it's better that we take a trade that fits our expectation, that fits our strategy, than to take a trade just because of an emotion. So thank you very much for being around. I wish you best of luck during the New York session today, and I also wish you a wonderful weekend, and I look forward to seeing you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to analyze and choose random pairs that we will be monitoring for the next week. Do have a wonderful weekend. Bye bye.